Good to have you here on board. You know, we just got further confirmation of how deep this recession is, with retail sales down sharply 16%, factory industrial production down by the most on record. How do you look at the month of April? Do you see it as a bottom?
Well, we certainly hope so. I think depending on how, obviously, the openings go and other things, I think it's highly likely that April is will be the worst month we see. May not be much better, but hopefully we're near the bottom here in one form or another. But at the end of the day, you know, this is a lot about science and not about, you know, monetary policy or fiscal policy. This is about, you know, how the science progresses to make people feel comfortable coming out and participating in the economy again.
Where do you come down, though, on this debate over whether how crucial it is to reopen the economy right now, because the economic cost for people's health and their livelihoods is just going to get too great, where it outweighs some of the costs that we're dealing with when it comes to tracking these infections?
Well, I think this is a very tough call. I think that we do need to begin opening up the economy, and I think there are ways, if we take some care, we can do it and continue to make progress on the public health side. But the total shutting down of the economy has been very expensive, not just in economic terms, but in health and safety for people who don't have the virus, the procedures that haven't been done in hospitals because of the virus, the people who may have died at home because they couldn't get into a hospital. I mean, there's all sorts of costs that we're bearing. And, you know, as an economist, you know, I'm always looking for cost-benefit analysis, and we've been sadly short of that. But it seems like the efforts to begin opening up parts of the country and sectors of the economy on a careful basis is the wise step to be taking.
So as an economist, how do you forecast what comes next in terms of how fast growth and jobs can actually come back?
It's really hard. We've never really been in this situation before. I like to think that jobs in a natural sense will want to come back, but you know, we've also got policies in place that are going to make that more difficult. I mean, we've got 60% of the people who are getting unemployment insurance are making more money on unemployment than they are working. That's not going to speed job recovery if we're not careful. So we've got to really be careful about our policy choices in this matter if we want the economy to respond quickly and not have policies that sort of slow that response. But again, I say we don't have much experience with this kind of shock, and so there's a lot of uncertainty and a lot of downside to this, and there's some upside, but we have to be careful.
Charles, there was some commentary among the Fed speakers this week that the shutdown that we've experienced over the last 2 months, in the words of one, was a card that you only play once. If we get a second wave or a spike in the wintertime, is it your belief that we can do this again, or do you have to power through it?
Well, again, I think that depends a lot, Carl, on the science, where we are in terms of testing, where we are in terms of antibodies, vaccines, and other things. So if this returns later, you know, we'll have to see where we stand. So it's really hard to know. It's certainly going to be very difficult on the economy if you have to go into this mode again, and I certainly would think public officials would try to do everything they could to avoid that. But it certainly, hopefully, will be in a different situation medically and on the science side to make those choices a little more obvious or a little easier to make. But let's hope not.
China's the other big story this morning, and Kudlow's on the tape right now saying that cutting the corporate tax rate in half for companies that move production back to the United States is something to look at. I wonder, I mean, we're all for repatriating supply chains, but is the labor force ready to address that kind of new employment? And what could inflation look like if that were to happen?
Well, certainly, obviously, jobs went to China and went to other places, not just China, partly to lower cost of production and lower the cost of the supply chains and bring savings to the U.S. consumer on products that were brought in. That was a good thing in general. If you bring them back, then obviously, or force companies to bring them back or provide them incentives to bring them back, it will cost you something, whether it be in terms of the tax cut. If there's a tax cut on bringing jobs back, then that obviously will offset some of the higher labor costs that firms might engage in. But I'm really, I guess, uncomfortable with the increasing tendency to want to manipulate the economy out of Washington with tax rates and incentives and twists and turns and policies that try to change relative prices, whether it be for labor versus capital, or whether it be for other things, financial assets, different interest rates, different borrowing costs to different types of companies. I think the government is not very good at setting those relative prices. And I think we have to be very careful. We're in a period where government, whether it be Congress or the fiscal authorities, administration, and the Fed, have moved much heavier into interventions in our economy. And the track record of Washington to getting those things right is not stellar by any stretch of the imagination. So I'm a little worried about that tendency that we can control everything so precisely to get the outcomes.